When you think about Tesla's future over the next 3 to 5 years, you can see some key areas of growth and possible problems. At the moment, there is a lot of worry about Model 2, which is expected to bring in 50 to 60% of new growth over the next 2 to 3 years. But it's thought that robotaxis and self-driving cars will not be available for another 5 to 6 years. In the past 10 years, Musk and Tesla have given us a lot to think about, and this is one of the scariest times. The situation we are facing now is like a Cinderella story that has turned into a nightmare on Elm Street. It all starts next Tuesday when Musk needs to be in charge of the story. If he isn't, bad things could happen. We'll take a look at two shocking predictions that are setting the stage for a huge change in Tesla's future and the future of cars in general. First, we'll look at an interesting prediction from a top Wall Street analyst who is not only positive but also downright bullish on Tesla. This analyst says that the company's market cap could not only return but also reach new heights in the near future. After that, we'll talk about the excitement surrounding Tesla's long-awaited robo-taxi event, which some people are calling could be the most important day in the company's long history. This event could make Tesla much more successful than it is now in terms of technology and the business. We will look at what these predictions mean, break down the factors that are making people so optimistic, and see how these changes could affect the market and your investment plan. If you're a die-hard Tesla fan, an interested investor, or someone who is amazed by how quickly car technology is changing, this episode is just what you need. Fasten your seatbelt, click like, and if you haven't already, sign up for Tesla stock news. Let's take a look at these amazing changes in Tesla and other fields. Morgan Stanley just released a study telling investors to include more AI-related sectors in their valuation model for Tesla. These sectors could include AI computing, energy storage, and even humanoid robots. It's really amazing how much attention is being paid to AI these days. A well-known person on Wall Street named Dan Ives also said that the story about Tesla is starting to change. One wonders if analysts will continue to focus on Tesla's auto margins or if they'll start to see how Tesla's AI innovations affect more than just the car industry. Dan Ives, managing director at Wedbush Securities, is now here to join us. Dan, Tesla's new ideas, like the RoboCab, are making more people think that the company could reach $1 trillion market cap. You said that Tesla is an AI play that is undervalued in the market. Could you say more about that? Even though Tesla has already surpassed $1 trillion market cap once, ARK Invest thinks that its fair value could hit around $8 trillion in 5 years, mostly because of AI and self-driving cars. It has been said by Elon Musk that if the Optimus robotic robot is developed well, Tesla's market value could rise to $25 to $30 trillion. Dan also talked about how important the AI part could be for Tesla's value on its own. When we think about the upcoming show, the Robo-Taxi on August 8th, we have to wonder how long it will take to make these cars, and when they might actually be on the roads. There is a lot of excitement because Tesla plans to start making the cars soon after the reveal. However, the stock market hasn't responded much so far. Viewers, what do you think the market will do after this is shown? Will there be a big change in Tesla's stock? In the past, like with the Model 3 and Model Y, Tesla has been able to go above and beyond what buyers thought would happen. With the RoboCab event coming up, which suggests that self-driving cars may be on the horizon, it begs the question, why wouldn't the market respond more strongly to Tesla's bold move towards a future shaped by self-driving cars? However, it looks like most buyers are happy to do nothing and watch from afar till these innovations start to make money. This somewhat careful approach makes me wonder what you think the market will do, especially when the financial effects of Tesla's innovations start to show up. As an interesting aside, one would think that investors would be more proactive in their plans if they really saw the promise here. According to Dan Ives, the upcoming robo-taxi event could be the most important day in Tesla's history. It could lead to a huge change in both robocabs and self-driving car technologies. At its core, Tesla is an AI and self-driving tech business that is shaking up the tech world. Dan says it's possible that Tesla's stock will double in the next 12 to 18 months. A statement like this, especially from a seasoned analyst like Dan, shows that people have a lot of faith in Tesla's future. Even with all this hope, Tesla's stock is still below its all-time highs from 2020, which makes you think. In terms of Tesla's internal dynamics, the number of employees has dropped by 14% since Elon Musk announced layoffs in April. The world headcount is now 121,000, down from over 140,000. What might these cuts mean for Tesla's ability to grow and keep costs low? Even though the layoffs are painful, they seem to be a smart way to cut costs as demand around the world falls, especially in key areas like China. As we move on to the next quarter, hopes may be low that these changes could set the stage for big benefits in the future. Tesla is dealing with what you might call a Category 5 storm, but there's a strong sense that a Cinderella story is about to begin that could bring the brand new life, especially through its AI efforts. Now, let's talk more about the problems that might come up when Tesla's robocar starts to be used. It is well known that Tesla likes to make a lot of noise when it releases new products. This has worked well and poorly for the company in the past. One famous example is the introduction of the Cybertruck, which got a lot of media attention and public interest because of its unusual design and the accident that happened while it was showing how durable the windows were. This trend of high anticipation could make things more difficult when the robotaxi comes out. On the one hand, the hype helps get people interested in investing in new technologies and getting people excited about them. On the other hand, it makes it more important for Tesla to keep its vows. If the robotaxi doesn't live up to the high hopes that the company has raised through bold marketing, customers may be let down and lose trust in the company. Not only is it hard to meet standards, but it's also hard to make sure they are in line with what current technology can really do. Even though autonomous driving technology is improving quickly, there are still a lot of technical and legal problems that could make it hard for robotaxis to get up and running. Tesla needs to be very careful about things like safety standards, getting approval from the government, and people's willingness to accept driverless cars. Another thing to think about is the operational and organizational problems that come with putting together a fleet of self-driving cars. This includes everything from the charging stations and maintenance facilities that these vehicles need to run safely to the software updates and cybersecurity measures that are needed to keep them running smoothly. Because of these things, the excitement about Tesla's new products is good for getting people's attention, but it needs to be carefully managed so that it doesn't get ahead of the technology's real progress and readiness. Tesla has had to do this many times, but with the robotaxi's launch, it will be looked at even more closely. It's a fine line between building excitement and keeping realistic expectations in check. Finally, while we're looking closely at Tesla's new ideas, it's important to keep the bigger picture of the electric car market in mind. Ferrari is making big steps forward by releasing its own high-end electric sports car next year. It will cost an unbelievable $500,000, but it will be worth every penny. This move shows that Ferrari is serious about making the switch to electric cars as the future of great cars. This event not only shows how competitive the luxury EV market is getting, but it also shows how the whole industry is moving towards more environmentally friendly ways to get around. As well-known luxury car companies like Ferrari get used to the new electric world, it will be interesting to see how their entry changes market trends and customer tastes. Robert Frank of CNBC recently talked to Benedetto Vigna, CEO of Ferrari, about the future of electric cars and Ferrari's plans for the future in this changing market. Vigna was optimistic about the move towards electric cars and said that he thinks many present Ferrari owners will switch to electric cars as more people try out the company's electric models. His comments support a larger trend in which even well-known high-performance names like Ferrari are adapting to the electric revolution. Vigna's ideas show that Ferrari isn't just playing around with electric technology. They're betting that it will be useful in the future. This change by a brand that is known for setting the gold standard in luxury and speed in cars is a big sign of how the industry is going to change. Manufacturers of high-performance cars have traditionally relied on internal combustion engines. However, electric cars' better performance metrics, like Tesla's Model S Plaid's acceleration times, are changing the competitive scene. In fact, the speed with which these electric cars can go from 0 to 60 miles per hour has made standard car companies like Ferrari and Porsche scramble to catch up. People don't just see this switch to electric as a choice. They see it as a must if they want to stay in business and be relevant in a market that is becoming more and more dominated by electric-first companies like Tesla and Lucid. It's interesting to see how traditional luxury and high-performance brands can use their pricing and brand tactics to their advantage. Because these cars cost hundreds of thousands or even $500,000, the companies that make them can afford to use cutting-edge technology and expensive parts, so they can stay profitable even when they don't sell as many cars. There's a bigger story shift going on that goes beyond the tech problems and changes in the market. Wall Street was mostly interested in Tesla's car margins just a few months ago. Now there is more and more talk about AI's role and how it can be used in the auto business. As we wrap up today's talk about Tesla and how the auto industry is changing, it's clear that the business is at a crucial juncture.